Good morning and welcome to the VSA Capital 5 Minute Morning Miner on Wednesday, March 26th. And it's myself and Ollie. And I can tell you, because Ollie is in the office today, he's looking very smart this morning. He's got a tie on, he's looking at his best. Oh, Ollie, come on, tell us, where are you going?
Squash Club finals night.
Squash Club finals night. Surely you'll be in a squash kit. Aren't you in the final?
Not this year. I did win a couple of years ago, though.
I played squash last night and got absolutely hammered, actually, but I was playing one of the club's top players. So there we go. Anyway, right, turning to mining. There's quite a lot of news out today, but I think it's worth just mentioning, Ollie, quickly. Obviously, yesterday, the EU selected 47 mining companies, to sort of make critical or whatever. And I know I was watching European Metals, which was one of them, and it shot up over 100% in the day. What's your comment on that?
They've picked 47 projects which are undeveloped. It includes midstream processing and recycling companies across the whole EU. There's obviously a bit of a concentration in Spain and Portugal, where there is a lot of lithium, tungsten, copper. What's perhaps interesting is that even though a lot of these projects will be well known to people, particularly who follow the space, and in certain jurisdictions, this probably won't make much of a difference, as they're already progressing well through permitting, have significant commitments in terms of financing, like Vulcan, for example, in Germany. But a couple of the lithium projects in Portugal have been included, Savannah Lithium, and also a private company, Luso Recursos, which used to be Nova Litio, but both of those have had lots of either community or permitting issues that haven't been straightforward or clear as to why they've arisen. So this overarching designation could really help push those kinds of projects through and get them past these hurdles.
Yeah, I mean, I think what I find interesting also is, the UK could do exactly the same, obviously, with the mining companies down in Cornwall with the tin, tungsten, lithium, you name it. And you'd probably have the same result in the share prices. Of course, what would happen also is if the UK government did decide to support those mining companies, the 22 billion black hole that Rachel from Accounts is struggling with would vanish overnight, because that would produce the income to fill it. It's way above her pay grade, a concept that you could actually generate growth out of industry or mining to pay off debt. But that is what would happen. So you never know. We'll keep our fingers crossed. Maybe someone will whisper in here and say, you can solve that black hole, actually, instead of putting up taxes, just let Cornwall get on and do its mining. We'll live in hope. This is not a party political broadcast, by the way. Ollie, move on. Let's go to the news. What do you want to talk about? The kenmare had some news, though, didn't it?
Full year results and a project update, which the growth project seems like it's on track. Revenue for this year, 392 million, off 10% year on year. That was ilmenite prices, which were down 14% year on year, offsetting slightly higher shipment volumes, which were all broadly in line with guidance. Costs were up about 5% on a unit basis, but EBITDA with that lower top line was down 29% year on year to 157 million. So as a result, and in combination of the peak capex for this growth project, the dividend was cut by about 43% year on year to 32 cents a share. Obviously, that decline in earnings is largely driven by market price, which has dropped off since the peak after COVID, same with a number of metals. So it does look slightly surprising that the recent offer at £5.30 a share was dismissed out of hand. the stock obviously moved up a long way after that offer to over £4, but the trading range at sort of £3 to around £5 for the last 2 years, given the drop in earnings and drop in dividend, it seems quite difficult to see how they're going to get back to £5 a share when the prices of the underlying commodity are dropping, and that is the key driver for the outlook. As the growth project, I think, more or less keeps them where they are in terms of production.
Interesting. All right. Any others?
Sovereign Metals came out with a fundraise today, 40 million Australian. That's all towards their Cassia rutile graphite project. It looks like it was mostly out of Australia, run by a broker from there. Obviously, Rio made a strategic investment into Sovereign Metals in 2023. It doesn't say whether they held their corner for this, so I suspect not, but they did a strategy presentation on graphite a couple of weeks ago, which is pretty informative. But this is obviously a very large scale project, and they're highlighting that the costs and quality of the project are such that they don't require a downstream strategy like a lot of the other Western backed graphite groups, and they will be able to compete with China on their own merits, and that scale and low cost is really why Rio have wanted to get involved. This fundraise will drive the PFS development work, and that is due to be published in Q4.
Okay. That it for you?
Only a couple of other small announcements. Landor added some extra claims around their project in Canada. That follows receipt of an option payment earlier this week, so they've got a bit more working capital. And Goldstone announced a 14% monthly increase in production to 600 ounces or so. So that's an extra $1.8 million in revenue, which will help. It isn't immediately obvious as to where that increase come from, whether it was grades or recoveries. It looks like the mining rates were fairly stable, so we can't tell if that's going to be maintained in the next few months, but certainly that will be a boost for them.
Yeah, look, we've talked quite a lot about Landor in the past, which we like over in Canada, partly because Luso Global is involved in it, and the CEO, Alexander Ian Shaw, we have a lot of time for. And Goldstone, I mean, we've, again, talked about quite a lot in the past. Emma Priest has done a remarkable job there. All credit to her. It's finally worth just, obviously, it's the spring statement today. You've all got to look forward to. We've also just had inflation figures, which actually came a little bit lower than expected at 2.8%. Apparently because of a drop in the price of women's clothes. But I think that could relate to the fact that now, of course, you just get given your clothes now for free, apparently. Well, if you're a government minister anyway. And so, of course, they're free, so you'd expect it to come down. On that note, I better shut up and stop. Thank you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.